I'm never comfortable talking about myself, and that's the truth. And secondly, I didn't think that the journey I took, particularly over the last maybe 30 years or so, were really that exciting and compelling. But actually, I was persuaded by Richard and some of my colleagues at Deutsche Knowledge Services that it was a story worth telling. So as Richard mentioned, I actually came back almost 4 years ago now, having lived more than half of my lifetime in New York. So if I could take you a little bit to that journey, if you could indulge me, it started more than 30 years ago. I grew up in Iloilo. Went to school at UP Iloilo, took a 4-year course in accounting, came from a middle-class family with 2 working parents. I always remember that my dad used to tell us that the only way to get ahead in life, whether personally or professionally, is by working hard and showing that hard work and dedication. And that thought and value always rang a bell everywhere I went. I started my career having done well in school at UP in Iloilo with SGV. I thought that the path, like a lot of kids trying to follow the footsteps of their dad, in my case, was to become a CPA lawyer. My dad is a lawyer, or was a lawyer. He stopped practicing now. So that was the only aspiration that I had. I did quite well as I was working at SGV, and then they actually, quite frankly, offered me the opportunity to pursue an MBA abroad. And that was a thought that, prior to that point, never really struck me. I had lofty goals, but only in terms of achieving what I thought I could achieve being in Iloilo. In the end, I did not accept the scholarship offer abroad. I asked my parents if they could help me out, because in the end, I also didn't want to be tied down for whatever the contractual period was that was going to be attached to that scholarship. So I went on my parents' scholarship, worked hard, arrived in New York, a wide-eyed young adult who's never really been to a large city. I've never been schooled, I've never worked and lived even in Manila. So it was a journey that went straight from the province of Iloilo straight to New York. That journey was made easier, obviously, by the fact that I had family and friends in New York that helped me adjust. I went to school at NYU, as Richard mentioned. I took my MBA. I could still remember that the first week I was there, I not only had the culture shock, but I had the language shock. What do I mean by that? I had this professor who was New York born, with this thick Brooklyn accent. And I was sitting at the back of the class, and I remember, how am I going to really learn when I can't even understand what he's talking? Because, you know, the accent was so thick. Obviously, I told myself the only way I could adjust really was if I bought a TV and started listening to, you know, American shows. And exactly that's what I did. You know, try to get acquainted from a hearing perspective on the different accents, et cetera, and then over time, it got better. So I graduated, and then similar to the career I started in Iloilo, which was in public accounting, I tried to pursue the same career. I had the opportunity to be offered an audit staff role by Ernst & Young, Arthur Young at that point in time. I stayed there for about 2.5 years, got my CPA as well while I was in New York, and you know, been exposed to different array of clients. At one point, I audited the Warner Communications. I had the opportunity to actually look at the contracts of the likes of Barbra Streisand with the Warner Brothers. I had the opportunity to review the MTV awards balloting and all that. And then I also really had the opportunity to be exposed to the financial services industry. And that really started piquing my interest. I was assigned to Payne Weber, I was assigned to American Express. And through the period of the 2.5 years I was there, I really started getting excited with the industry, with what it's all about. It was more of a self-regulatory environment at that point in time, in the 80s. And I thought it was an industry that was driven by performance and by a lot of product innovation. So, having done my usual 2.5 years, which probably is no different than a lot of the young kids out here who start out in public accounting, I started thinking it's probably the right time to make a leap and join private industry. So I applied to a whole bunch of firms, and I ended up landing at Morgan Stanley. So I thought that when I landed out there, I wanted to make sure I not only succeeded, but I made a difference. I worked my ass off. I'll tell you, my first week out there, I joined finance, collateralized mortgage obligation product control function. I was given a 5-6-inch thick book. It was a compilation of the trust agreements, the indenture trust agreements of one particular deal. And I had to pour through that, try to understand. And having said what I said, that I wanted to make a difference, I wanted to ensure that right off the bat, I would be able to add value. And I saw a particular provision in that deal where the front office guys that struck the deal, as well as the other finance guys, did not even see. I brought that up to the attention of management, and I made my mark at that point in time. I stayed with Morgan Stanley for about 17 years, all in. And the reason I stayed in the industry, and even post Morgan Stanley, Credit Suisse, and now Deutsche Bank, because I thought that the industry really provided a lot of opportunities for learning. It's an industry that, as I said back then, was pretty much self-regulating, but we know post the credit crisis of 2008 and 2009 that all things have changed. It's an industry which is under heavy regulatory scrutiny these days. And so, but that itself still makes the industry, in my view, really challenging, really interesting. There's a lot of learnings to be made. And working for a large global investment bank like Morgan Stanley, I also had the opportunity to move around. As a matter of fact, I went to Hong Kong for 2.5 years as the regional head of product control. That was a build-up of a function that never existed before I arrived in Hong Kong. And then having spent 3.5 years initially in product control, I also took a big risk. And that's important because a lot of the things that I did, some others will tell me that that was a big risk that you took. So I've had a pretty, you could say, comfortable job in the finance function, but I got an opportunity to go to the front office in fixed income research. I took that leap of faith to move in there knowing that I'd already built a strong history, footprint in the shared services function, finance function, but I wanted to learn something more closer to the business. So I spent another 3 years in fixed income research, and quite frankly, that's where I got promoted to vice president. So talk about corporate titles. When I landed in the industry, knowing where I came from, with the thick accent that I had, and still do, I never really saw myself as even making vice president, because there were very few vice presidents in the industry. But then I started saying, I'm as good, and I've delivered as much as some of the folks that have already made it. As a matter of fact, I was an AVP in finance, in product control, where I helped pull together a deal to sell off our servicing business that we in-house at that point in time. We were actually a revenue-generating unit. We were making money because every deal that we administered actually had built in their fees to pay us to help administer and service those deals. But then New York, as we all know, and back then, without the BPO industry still in vogue, we had realized that there are probably organizations that could do the same job cheaper. So work with a deal that was valued about 20 to 30 million, that netted the bank, Morgan Stanley, about anywhere, I think, between 5 to 7 million, as an AVP, reporting to a vice president who was out there in Europe, traipsing, attending operas and all that, because that was her passion. So I did the deal by myself, working with internal legal counsel with 2 major legal firms in Wall Street. And then I had to explain the deal to the firm's controller. I had to explain the deal to the head of the fixed income division, at a position where I thought I was not even capable and senior enough. But all that was driven really by the fact that I really wanted to learn. I worked hard. I always wanted to make a difference. So I stayed there, and then following that deal's conclusion, I moved to the front office in fixed income research, and then had the opportunity to go to Hong Kong, and then came back to New York. When I was in Hong Kong, again, I was stuck and felt comfortable with where I was at that point in time, being a vice president. I said, you know, I see a lot of my colleagues have made it to director. I'm probably as good as them. I work my ass off, I work hard, I delivered. It's an industry that's very much driven by performance. And then I left Hong Kong to go back to New York as a director. I stayed for another 2 years. In the 2-year span that I stayed with Morgan Stanley in New York, I actually also got promoted to managing director, running a large organization. There was a calling at that point in time for me to consider where I want to do next. I thought that I was going to start my Wall Street career and end it with Morgan Stanley. Having been there for 17 years, there were all those additional attractions and enticements that I saw with the offer that Credit Suisse put in front of me, particularly because they were suffering from a lot of processing issues, which were actually compounded by culture issues with the front office, with the trading desk. So I decided to move. At that point in my career, I had the opportunity to network, to be exposed with some of the senior captains in the industry. As a matter of fact, Vikram Pandit, ex-CEO of Citi, when he was still at Morgan Stanley, was trying to convince me not to leave. John Mack, who had already left Morgan Stanley as the CEO or co-CEO and had become the co-CEO of Credit Suisse, was in fact the one that tried to convince me to join Credit Suisse for all the opportunities to clean house, if you will. That was a period when the industry itself was suffering from a lot of regulatory incidents. So I came in, helped clean house. It's an industry that for some of you who may or may not know is very much cutthroat. When you're in the so-called back office, dealing with the front office where, you know, the traders, the sales people, they think they own the bank because they're the ones that drive the bottom line, the P&L. So given the issues, as I mentioned, the operational incidents that they've had, it was also an experience for the next 7 years where I really was trying to uncover issues, incidents, front to back. I had the opportunity to fix a lot of them, leading to, you know, the 2007, 8, and 9 credit crisis, where even during that crisis, we had to publicly tell the regulators and our shareholders that we were going to delay our 2007 earnings release because we had to push back close to 1.1 billion of losses into the prior year on the back of a major incident. So, you know, I was caught up in the middle of all that, you know, that frenzy to clean house. When you go through a period like that, running at that point in time in my career, about 850 people globally at Credit Suisse, it was a very daunting task. It sucked the wind, quite frankly, from me. There was a 7-week period where I was working 16, 18 hours. No let up, no break, not even on a Sunday, just to get through the investigation. But at the end of the day, and the bottom line is, for a lot of the hard work that we did, that I always felt was necessary, again, to make a difference, you know, we got through it. And in 2009, I thought that it was time to step out of a line role and move into maybe a different role. So I took on the role of Global Head of Product Control Strategy and Change at Credit Suisse. It's more driven by developing a front-to-back strategy in terms of processes, of systems, of technology, as well as the first rumblings of a real nearshoring or offshoring. So as a matter of fact, I was the regional head of product control at Credit Suisse that actually nearshored a lot of our finance functions from New York to Raleigh-Durham, North Carolina. And then some of my functions in London, at that point in time, we thought Singapore was like a nearshore. still less expensive, until we realized 2 years later, immediately thereafter, that wage inflation was just going to run amok, and Singapore was just nothing more than another major expensive hub location. So I stayed in Credit Suisse through actually September of 2010. And so back to what made me decide to come home, two specific reasons. For personal reasons, both my parents were ailing and aging, and I thought it was a good time to come back. I always thought that I had my fill of what it's like to work in Wall Street, in New York, and maybe done a little bit more than others. And secondly, as I was always coming back home, as Richard actually mentioned, I did get a call from a headhunter. Would I want to come back and work for Deutsche Knowledge Services? So I scratched my head. I said, Deutsche Knowledge Services, what is that company? Because it didn't have the DB, the Deutsche Bank brand in its name, and I wasn't sure what it was until I came home for a visit and met some people. And at that point in time, quite frankly, Morgan Stanley was trying to convince me to come back in the region to be their CFO. But obviously, between that opportunity and the opportunity to work for Deutsche Knowledge Services, I took the opportunity to come home because I thought that at this point in my career, with the experience that I've done over the last, 24 years in this industry in New York, that it was something I could give back, to the industry out here. And Deutsche Knowledge was the kind of organization, particularly in the whole knowledge process outsourcing, that I thought was really in the game in terms of aggressively building a full front-to-back support primarily for investment banking operations. The type of skills, the type of processes, the type of operations that, quite frankly, I only saw in the large hub locations. I was not even aware that we had the capability at that point in time to cover full end-to-end an array of products, from your simple financial instruments to your more complex structured trades, et cetera, et cetera, et cetera. But having said that, I saw the opportunity, I landed, and in August or September of last year, as we were planning our own succession plans, I stepped up to become the first Filipino CEO for Deutsche Knowledge Services. It's an organization, as Richard mentioned, of about 2,300 people. We've grown, not probably in numbers, but in terms of capability. So when I look back, at least through the last 4 years, the industry here in the Philippines was not as fully developed, and it was very telling. How did I know that? At the time that I arrived at DKS in October of 2010, we had a lot of expats. I think we had maybe somewhere between 60 to 70 expats. It was very telling because while I saw it as a good investment by the bank to really build the capability, bring in the right experts to develop and train people, I also saw the fact that it wasn't going to be a sustainable model. We were never going to sustain having 60 to 70 expats. The cost base was up and all of that. So that was one of the first things I tried to focus on. As a matter of fact, in my first week at TKS, when we had the Exco, I thought I was still in New York. It was like, an expat-driven Exco with me being the only Filipino. So I'm very glad to say that 4 years later, when you look at our Exco these days, I don't know, I think we only have one expat. Everyone is a local. We have two. I'm being corrected by my colleague. We only have two, and everyone else is a local. So a lot of what we did over the 4 years was really to transform ourselves, and that's probably no different where we need to take this industry. particularly because I think the foundation, the skills are there. The Filipino talent is as good as anyone you can find out there. What we tried to develop and what we have now at Deutsche, we have world-class talent. We have talent that can go to any other major hub locations of the bank and can take on actually important senior roles. So that's very gratifying itself, but knowing that the landscape we operate in continues to grow, continues to be very, very competitive. And so, back to transformation, we as an organization have embarked on a major transformation program. It's a very people-oriented organization, so we have to really upskill and invest in talent. We have to make sure that we achieve sustainable performance, because that's the only way we can only grow, not necessarily in numbers, but in capability. So over the last 18 months, for instance, we have a major program working with our Asia-Pacific colleagues to migrate most, if not all, of the remaining complex processing roles into Manila. And we've been able to succeed, not only in bringing it in, but in maintaining and even enhancing the level of service that we provide to them with very minimal operational incidents. So it's a good story. Obviously, that is a journey that we continue to embark. No different, I think, than the opportunity we have in the Philippines. So while the BPO industry itself has a strong footing with where we are in terms of numbers, in terms of growth potential, we need to actually, I think, continue to transform ourselves to remain competitive, because there's a lot of other players out there, not just in Asia Pacific, but in Europe, who are trying to build and drive a similar capability. But I'm very comfortable because I strongly believe in the Filipino talent. I think not only do we have the talent, we have potential, we have the right skills, that if we provided the right opportunities to these individuals, we could really go far. Secondly, I'd also like to, I guess, impart and share that, you know what, you have a lot of hardworking Filipinos out there who, while they do their jobs very quietly, they do deliver. So for us in the so-called high-end, high-value analytical processing landscape, the opportunities we've seen in our own organization as well as within the industry has really continued to grow. I spoke with some folks at Xerox who are trying to build a 400 FTE finance shop out here. I actually convinced them because they thought Malaysia or India was the better location. So, but in the end, I guess, few parting words. We have to be very opportunistic. When I mentioned at the outset that hard work and dedication gets you there, it's no different than where we, I think, collectively as an industry could get to. And I always tell my staff, you should always aim high. Never sell yourself short. Because not only that you will always achieve those lofty goals, but if you don't, if you really aimed high, you fall short. And where you land is still a really, really good position. So aim high, go for it. Don't let anyone tell you that you are any less than what you are and what you can become. Thank you.